Hello viewers, we are going to share our views with you among ourselves on the topic government debt monetization is better than government's deficit monetization. Monetization means printing of currency to plug the financial pressure of government. Deficit monetization is a short-term solution to sort out physical mismanagement of government, to bring short-term economic growth for short-term political gain by shifting government expenditure on national exchequer. In this process, it puts pressure on the government to curtail infrastructural as well as developmental expenditures. And it also puts pressure on the government to raise government borrowings. Short-term economic growth may be achieved by hijacking RBI's long-term economic growth policy. That is long-term sustainable economic growth. So, deficit monetization for deficit financing is, or it brings a lot of pain and distress on the Indian economy, which raises revenue expenditure, financial pressure, physical deficit, government borrowings, government debts, inflation, market volatility, currency volatility, bond yields volatility, by weakening asset quality, leveraged balance sheet, declining GDP growth rate. And to solve all these economic problems through deficit monetization, it's away a huge national resources that is most valuable for the economic development, and in this process leaves little for the private sector. Here, to raise excess resources, government issues government bonds in the midst of losing absorbing ability of the economy. That's why rating agencies have downgraded India's sovereign credit ratings at a critical level. Here, out of deficit monetization, we see that deficit or fiscal deficit has increased from 6.5% to 9.3% in 2021. Government debt has increased from 71% of GDP to 91% of GDP in 2021. GDP growth rate has declined from 8% of 2016 to 4% by the end of March 2020, which has been further thrown into negative zone, where it stands at minus 7.3% by the end of 2021. Seeing this situation, out of deficit monetization, which brings a lot of pain and pressure on economy, and out of it economy is under financial pressure, financial crisis, and distress in Indian economy. So, deficit is not good. So, debt monetization is better than deficit monetization. In debt monetization, currency is printed to plug or to lower the government debts. While in the deficit financing, currency is printed to solve immediate financial pressure of the government, which puts pressure on the economy. And here the printed currency is brought to plug the deficit or physical or government deficits. Thus, in this situation, debt monetization, which lowers revenue expenditure, government debt, physical deficit, inflation, and within this situation, it paves the way for GDP growth rate, and out of good GDP growth rate, which provides or which lowers government debts, government borrowings, or paving the way to increase infrastructural and developmental expenditure for a smoother and healthier economic growth. And in this process, it strengthens asset quality, it strengthens balance sheet, it lowers inflation rate. Under this situation, we see that debt monetization brings a good economic future in the long term. So, RBI's sustainable long-term growth policy to support government's economic growth policy is maintained, and that is why it provides a long-term growth opportunity by lowering government debt, and it is possible through debt monetization rather than deficit monetization. That's why debt monetization is better than deficit monetization. This is my way of thinking. Thanks a lot of thanks, my viewers.